Curzio here with another live video. Love your feedback, frankcurzioresearch.com. And I titled this The Most Dangerous Market I've Seen in My 25-year plus career. I've mentioned that before, but I wanted to explain this to you because where stocks are right now and what they're anticipating over the next 12 months is pretty insane. And there's even more evidence of that because I've been doing a lot of research and it is earnings season. We're going to see next week a lot of big companies report. That includes Home Depot, Walmart, Lowe's, Expedia, Nvidia. That's next week. So I have Home Depot and Walmart in our portfolio. If you're a subscriber, don't get ticked off. I'm giving them away because they're both up a lot. So if you're a subscriber, you're up a ton on those already. But when I was looking at Home Depot particularly, and I tweeted about this earlier, right now it's trading at 23 times forward earnings, one of its most expensive valuations. But I dug into the analysts to see what the expectations were, the sell side analysts. And there are 18 analysts that have a buy rating with a target price on it. Out of those 18, 14, right, they have a buy rating on it, have a target that's lower than where the stock is traded today. I've never seen that. I've never seen that. So basically, it's telling you that sell side research guys have no idea what's really going on. So you would have a neutral rating on the stock or a sell rating if the current price is below your target or if the current price. But you know what I mean. But when I'm looking at Home Depot and I see things like that where uh, the mean target, so the mean target from analysts is $229. Yet you have all these buy ratings and the stock's trading at 237, even though they're completely bullish on this name. You look at Walmart, 23 times forward earnings. Again, another expensive valuation. These companies deserve their premium, their dividends intact, they're good, they're adding employees. But they've run up so much where the mean target for Walmart is 130 and it's trading at 123. So what does that mean for Walmart? It means based on the analyst estimates, which a lot of them aren't even updating right now, you're looking at hardly any upside, but the risk is enormous. If things get worse, if the coronavirus comes back, if the China trade talks, all this stuff is factoring in. That's nothing good. So basically, according to the analysts, you would buy Walmart here, 5% upside, and tons of downside if things go bad. You're looking at Lowe's, same thing, 20 times forward earnings. The target price for the analyst is 117. Those are from all the analysts covering the average price, that mean price. And today's price is 113. So at all those buy ratings, you would think it'd be 20, 25% higher. Nvidia is trading at 41 times forward earnings. Do you think their earnings are going to grow faster this year than they did last year? You're out of your mind. Absolutely not. And this company thinks they're going to have pricing power in a market where people are dying for bargains, and we're in a worst recession since the Great Depression. So you look at the target price, almost every analyst has a buy rating on Nvidia. The average target is $302. The price today is 320. So it's 5% upside, but enormous downside if they miss and we get into a recession and the coronavirus comes back. It's just from a risk reward perspective. It's not just, wow, these stocks have run up, they're expensive. When you're looking under the hood, which is important, the analyst estimates all that matters because that's what you're going to see on TV. If you beat them, you should be okay. If not, you're not going to do okay. But that's the consensus estimates. These guys are super optimistic, and these companies are already trading at or above their target prices. So what's the upside of buying these stocks here? 5, 7%, maybe the downside is enormous. It could be 20, 25% if this market really crashes and the coronavirus comes back. China, no growth in Europe anymore. So I know this video is taking a little long expected, but man, just for me, I'm scratching my head as someone who's been 25 years saying, how could you buy some of these stocks at these levels? It's just really, really incredible. And thank you for just writing this. And thank you for what you do. I love doing this stuff. So I'll come back to you in another video tomorrow. Again, any questions, comments, frankcurzioresearch.com. And I'll come back to you in 24 hours. Take care.